Megan Greene is a senior research analyst at Greene Global Economics, and she joins me in the studio. Hi, Megan.
Hi.
Isn't it a case of us knowing more about what to expect for LTRO 2 on Wednesday because we have a benchmark to compare it with, namely LTRO 1, and that at least is a good starting point?
That is a good starting point, but it's really difficult to interpret what the take-up of the second LTRO operation is and whether that's good for the market. So, in my view, a small take-up would actually be a positive sign in that it means that banks have met their financing needs and they can maybe return to the markets for any further needs. But I think for the market, they'll view that as a bad sign because it would mean that banks aren't using the LTRO operation for a carry trade, and therefore it could mean that sovereign bond yields could blow out again.
What do you think is most important, the size of LTRO 2 or how many banks participate? I mean, last time around we saw more than 500 banks participating. It does seem to me that the stigma, to a large extent, has been removed with these banks choosing to go to the ECB and say, yeah, sure, we'll take cheap money. I mean, 1% for 3 years, great.
Yeah, I mean, I don't think that there's any stigma anymore to participating, but it's not free money at the end of the day, and I think people forget that. Collateral has to be provided, and the ECB, of course, has lowered its collateral requirements, but as the quality of the collateral deteriorates, more collateral will have to be stumped up, and of course there's an interest rate related as well. So it's not exactly free. It's cheap, but it's not free.
Do you think it's going to stabilize the markets in the longer term, or could we anticipate to see the same thing that happened after we had TARP implemented in the US, where you had, $700 billion US dollars thrown into the market, and essentially we saw a rally in the equity markets right after, and then as soon as it started to wear off, then the rally wore off as well. And just, you asked the question whether we're going to have to see the ECB underpinning continuing in order to have this sustained kind of recovery.
Yeah, I mean, I think that the LTRO is more like a TALF program in the US rather than a TARP. But I do think it has some legs, but it won't last forever. The LTRO is only really a game changer in the Eurozone insofar as it's going to support growth. And I don't think that there's any way that banks are going to be using the LTRO to actually lend. And so the impact on growth is pretty minimal. And I think, confidence has clearly been returned to the Italian and Spanish debt markets, for example. But I don't think that will last. And I think it will be undermined by real hard facts on the ground. So as GDP figures are released, especially for Spain and Italy, and as we see economic indicators come out, they're going to look appalling given that those governments are implementing austerity measures and structural reforms. And so I think probably the real hard facts on the ground will undermine the LTRO, and we may well see further LTRO operations in the future. We'll certainly see them at the end of this one. So in 3 years' time, when this operation is wound down, the ECB is going to have to roll it over. There's no doubt about it.
I don't know what I'll do if I'm sitting here talking about LTRO 22, LTRO 23 in years to come. Anyway, Megan, I know that you just got back from Greece as well, and you were there for a week, did you say?
Yeah, that's right.
What's the feeling in Greece? And I mean, we're still looking at, we have a parliamentary vote to take place in Germany next week. We have a number of other meetings set up in order to okay the very last steps of this Greek bailout package. What are they saying in Greece? Yeah,
overwhelmingly, people are really feeling squeezed in Greece now, more so than on any other trip that I've ever had the benefit to enjoy in Greece. But overwhelmingly, people also still support Eurozone membership. So I think that it's going to take a while and in further austerity measures for the Greeks to start considering what other options they have to this kind of decade of austerity and depression that they have in front of them on this current path.
But they realize that if they want to stay within the Euro membership, that they have to put these austerity programs in place then?
The austerity programs will be put in place. Yeah. It's the structural reforms that probably won't be implemented, and the government's sort of incentivized to obstruct the structural reforms. And so until you have a new political class come in, I don't see the government or the current political class actually facing up to those problems.
Interesting. Megan, thank you very, very much. Megan Greene, analyst at Greene Global Economics.